but welcome to our daily opportunity to go through the Chaikin Analytics program. We're going to tell you a lot today regarding how to navigate through the program. We'll show you the ins and outs, the different functionality, but we also want to take advantage of some recent trends that we've been finding, some different trends we've been seeing in the overall program. So what we'll do is ultimately I want to take a look at a few examples. I have a bullish example and a bearish example, but I also want to be aware of some really major events, including what's going on with the market, what's going on with earnings, who's reporting soon, and all that. So just give you some different things to look at, different takeaways that you can use throughout the program. So to tell you a little bit about myself and the whole Chaikin Analytics program, my name is Joe Bacella. I've been with Chaikin for about a year and a half now almost, and I'm responsible for our client success program, just kind of make sure anybody who's using Chaikin knows how to really kind of reap the benefits here. I work with Mark as well as Michelle. We help anybody who has access to Chaikin try to make sure that you have the keys to success, essentially. So we're going to go through some recent market trends as well as some stock trends. We'll give you a sense for a different method that you can use to go through the program. We're also going to go through pretty much a tour of Chaikin. So how can you access different functions, different actions within the program, and then ultimately we'll hold a Q&A session as well. So resources are available for you on, of course, our resources page. It's really important that you know where you can access vital material. This includes our subscriber webinar program. So we have a number of different events that we hold for you. This is for anybody with access to Chaikin. This morning we held our pre-market session where we went in depth regarding the condition of the overall market. We also, of course, have our daily workshop session as well as options too. So all these sessions are recorded. You can check it out right on our resources page. Feel free to, again, get access to all of this. So something I want you to keep in mind is your strategy and how you plan on being successful in the market. So let's keep a couple of things separate. You have really your approach to the market. Maybe that's a better way to think about this, is that we want you to keep in mind your own approach, right, to how you plan on profiting here. So whether you're buying and holding, you're planning on buying and holding for several months, maybe a couple of years, or if you're looking for maybe just a kind of quick swing trade, right? You want to be in and out of a position within a couple of weeks. You're buying a stock, then selling it, or you're probably trading options. You're opening a position, then closing it, right? The important thing is for you to understand what you plan on doing here. As long as you have this in mind, this will allow you to determine how quickly you need to open and close a position. This will help you understand when the overall market allows for a certain type of approach to be successful or not. Certainly, if you're a longer-term investor, I'm sure you've been dealing with a lot of trouble with the overall market for the past year or so, right? Whereas if you're a swing trader, this market, and if you've been able to be diligent enough, you've probably done really well, or at least to a certain extent. So it's important to kind of understand what's going on in the market so that you recognize, if you're a longer term investor, how much caution you need to take. So let's go ahead and begin. Let's get our understanding for the overall market first before we go through the rest of the program here. So we do this in 3 very simple steps. Again, Tuesday and Thursday mornings, I host a pre-market session. So you're welcome to attend these. I would definitely recommend, though, checking out a recording. We're going to do a pretty simple one today, but I think for the most part, if you check out the recordings of my pre-market sessions available on the resources page, you'll get a really strong sense of how we like to get an assessment for the market. So let's begin by taking a look at our charts here, right? Our charts, our technicals, all right? The most important thing is to recognize that we're looking at the SPY ETF here, so pretty much a surrogate for the overall market. And what you'll notice ultimately, what I mentioned a few seconds ago was, if you're a longer-term investor, the past year or so has been pretty tough for you. And so with that said, let me switch over my marker here. So when you consider the overall market kind of making its triple top here, that eventually is what led into our breakdown, right? So this kind of this kind of event, along with very underwhelming money flow here, was initially our warning sign. And by all means, it's much easier to see this after the fact, right? So we can easily point back to say that we are failing to make new highs. You didn't have much strong money flow. Power gauge ratings at the time weren't very strong, and so it was telling you to get out of harm's way. And so for that reason, ultimately, that was one of the signs where you could see this coming. You know, if you're, I know we had a good handful of swing traders who did really well by placing puts on the overall market and some individual stocks here, right? Now, sorry, 1 second. Just make sure to keep your microphones muted through the session. You had the same thing apply pretty much right here, right? Not only did we make a double top, but we pretty much made the same highs as we did before. This time around, you had a really strong money flow, both inward but also out, so a pretty big sell-off as well. And then, of course, what we're currently dealing with, what makes us separate from this, is the fact that we're still dealing with a really strong prolonged rally here, and you have money flow in a really strong position as well. So the difference is that you've seen just between these two factors is the fact that money flow was no good here. You had a quick sell-off here with money flow as well as a failure to make a new high. Whereas right now, you're still kind of pursuing these high points, and money flow in this case is in much better position. So just by looking at the price chart as well as the buying or selling behavior, you can see how we're headed in a much stronger direction here. Now, from a short-term perspective, let me go and switch my color. Take note of overbought, oversold, right? So overbought, oversold here, you can see is a great indication for helping you identify when to buy, when to sell, when to buy, when to sell, right? Now, we went through a prolonged period here, mostly because of money flow and the overall surge of the market. However, you can see how helpful this is when it comes to, especially if you're a swing trader, identifying when to avoid opening a bullish position, and ultimately, at the same time, you're going to be looking to open a bearish one, or at least you're going to think bearishly at the time. And when you're in more of a distinct oversold position, you can start looking for growth. So you can see again over time, when back here in the market, when you see the drop off, the market itself was oversold, right? When you see that we were rallying again, pardon me, overbought here, oversold here, overbought at the peak, overbought here, oversold, oversold. So you can see this rallying, you know, pretty much making the connection here of as the market makes its move. So all of this put together will help you not just from a short-term perspective, but also from a long-term. As for the power gauge ratings, taking a look at our sectors here, you can access this information on the left just by clicking on ETFs and clicking on spider sectors and click on the arrow in the upper left-hand corner of the page, right? So all of this put together, you can see the condition of healthcare, financials, materials, so on and so forth, right? And what you have referenced here are the number of bulls, neutrals, and bears in each group. So this is greatly helpful to get a sense for where is the crowding of bullish stocks, where's the crowding of bearish stocks. But also, if you consider it from like a frequency perspective, consider the number of groups that have significantly more bullish stocks than bears, right? You have healthcare, financials, materials, utilities, the overall market, industrials, all in really good shape. Now you have technology and energy here kind of right on even position, right? So about 50-50 each. Even you could throw consumer discretionary in there. But even the fact that the weakest group here, consumer staples, has 5 bulls and 8 bears, that's less than a 2-to-1 ratio of bears to bulls, right? So while the market itself might not be at its strongest like it was a couple of weeks ago, from certainly we're taking this from a short-term perspective when I refer to the market being very strong, consider the fact that there's really not a whole lot of weakness in the overall market either. And so this is one of those things where you can anticipate a bit of a slowdown in the market, but it doesn't necessarily mean that we're headed for a correction or anything ridiculous like that. So as you move along to our sectors, this is what allows you to our sector panel here. You can access this at the top of the page. This allows you to get a sense for how these groups are trending, right? So how are they shifting? How are they moving from one position to another? All right. And what you can access here is a series of pretty much getting a sense for how these groups are kind of moving compared to one another. How are the power gauge ratings, the power gauge balances shifting? So something great to keep your eye on here is ultimately what is the correlation? How are they shifting? You'll see in this example what we're looking at are our subsectors. So this is a little bit more of a detailed view. But this allows you to get a sense for what groups are, pardon me, this is our sector view, I'm sorry. But this helps you get a sense for while you have utilities here in strong condition, notice the fact that it's up about 8% over the past 6 months. But it's also worth noting that you're seeing a little bit of a decrease, right, in its balance of bears versus bulls. So this is one of those things where you can be more aware of how this thing is starting to kind of trend. While it has a really strong correlation right now, it's worth noting when you're starting to see a little bit of a pullback, it's important to note that and perhaps reevaluate any positions you may have that fall under utilities. From the opposite perspective, in terms of what is surging, consider healthcare here, right? So healthcare got really beat up since the initial correction back in August, and since that time, you're starting to see a little bit of improvement here. Healthcare listed is in light blue, and you can see how it's been outperforming financials, and it's starting to catch up with even the overall market here, right? The fact that you have an increase in bullish power gauge ratings here tells you that you're starting to see more growth potential in healthcare as a whole. So this is a really fun way to use our sector analysis program. Feel free to spend some extra time on this if you'd like to. I always like at least taking a glance at what kind of groups are shifting, just so I can get a better sense for really where the trends are moving. The final thing, of course, is market insights. So commentary from Mark Chaikin and John Schlitz. This information is available. I think the best way to really use this is by just reading Mark's weekly article. So some of the main takeaways that I had from his article here, the main event taking place is ultimately tomorrow afternoon at 2 o'clock. The Fed weighing a decision for whether to keep rates where they are or to increase. Obviously, that's going to have a pretty big impact on the overall market. But one of the great benefits of reading through market insights is that you're aware of these major events. From a practical standpoint, what exactly should I be doing with my portfolio? How does this impact me? Well, as you see here, ultimately using periods of short-term market weakness to buy bullish rated stocks is always the right way to go whenever you see a short-term pullback. Strong support, if you see the market pull back, what are its limitations? Pretty much you're looking at a move of 2020 to 2065. So on the SPY, all you need to do is move the decimal point over one move, and you see that's equivalent to about 202, 206. So right around this area here. Okay, so for the overall market, again, we're seeing a little bit of a slowdown, but I think for the most part, there's still plenty of bullish signs. Again, I would greatly encourage that you check out a recording of this morning's session. We spent probably a good 45 minutes going through a variety of details. We had a really good Q&A session too. But with that said, what we're going to do, let's spend some time going into some individual stocks here. All right. So when it comes to analyzing a stock, there are so many different directions that you can go in. There really are. You can look at stock based on the sector it's in, different things that you can evaluate, the condition of an oil stock compared to a tech stock. Think about comparing, think about all the different perceptions that come into play for a tech stock like Netflix compared to an oil stock like Kinder Morgan. I'm actually reading a book right now about the Exxon Mobil Corporation, and it goes in depth regarding how that stock has been valued and all the different factors that are used to evaluate its condition. Right. The point here is that you can get as detailed as you want when it comes to analyzing a stock, but as a whole, there is a lot in common. And the best thing that you can do is take advantage of our power gauge rating, because the power gauge rating itself, based on the 20 factors we evaluate, provides you with a very strong and a very reliable outlook for whether the stock is likely to perform well or likely to perform poorly. All right. So we're going to take this in two very simple steps. We're going to qualify the stock. We're going to ensure that we're looking at the right thing. All right, so that whole process is very, very important. And then we're going to go into timing, trying to determine whether today is the right day to be opening a position or not. Those two thought processes are very different. There's something that I think a lot of people confuse and tend to assume that, just because a stock itself is very bullish, that you should buy in. Think about that from a market perspective, right? We just said that the overall market's in pretty good shape. However, if you notice that we're overbought, today might not be really the best day to be buying in. So that's just one example, not just from an overall market point of view, but we're going to take all those principles that we just use for analyzing the market and apply them to individual stocks as well. It'll look a little different, but the whole mentality is the same. So we're going to qualify a position. We're going to figure out whether we should even be looking at a stock, whether we should even be considering opening a position on a stock. And after we're finished qualifying, we're going to go into timing. All right, we're going to try to figure out whether today's the right day to be buying or opening a position in the stocks that we have available here. So let's see. Real quick, lesson to learn for bullish stocks and for growth. This is literally an illustration of of growth in stocks or in ETFs. All right. So the important thing that we want you to focus on, one second, is you're considering a series of higher highs, right, and higher lows. That's correct. So as you watch for this pattern and you ensure its growth from point to point, right, this is what's going to help you determine whether a stock is likely to continue growing, right? It's just a gradual movement from point to point. You're going to see this in an example that we have, but as you go through, think about this similar pattern of something we were just looking at, right? Overbought and oversold. So as you follow a stock as it goes from overbought to oversold to overbought, down to oversold again, overbought. I'm trying to mimic the chart of our overbought oversold. Imagine this is our overbought oversold chart here, right? So when you see, let me switch over my color here. Choose magenta. As you go from oversold, right, you see the stock's movement, right? Well, this is pretty much what we would expect. We expect the stock to get back up to this point. Now, when you're overbought, you would expect a little bit of a pullback, right? Now, as long as you're looking at stocks with a bullish power gauge rating, strong relative strength, and strong money flow, you're in pretty good shape to expect a strong move back up here when the stock is oversold. Now, the important thing to keep your attention on is the fact that you are going from a higher point, higher than the previous one, right? Point to point, making higher highs. And that's the most important thing here. And you're going to use overbought, oversold on a cyclical basis to help figure this out. How I found the example we're going to look at today is by using my screener. Let me actually jump into the stock, then I'll come back to the screener. So I want to show you UNH. The stock here is a recent, I guess you could say, a recent breakout. And I think it's a good example because, we go to Cyan here. Most important thing is that the power gauge rating recently turned bullish, right? Now, for best practices, you're looking for a stock that turned bullish about 3 to 4 weeks ago. In fact, you can open that up to about 2 to 4 weeks, right? So you want consistency. You don't want to immediately buy in, although you would have been in good shape here if you did, but I'm trying to share with you more consistent practices that you can utilize. But in this case, clearly you go from neutral to bullish, right? And on top of this, notice this thin orange line here, right? That's our long-term trend line. So as long as you have the stock above that marker and you're bullish, that is what we use to ensure that the stock is what we would consider to be really classically bullish, like a Chaikin bull here, right? Now, this doesn't mean that you can buy the stock any day that you see it here, right? Imagine if you were to have bought the stock back in the middle of February. Imagine if you bought it back here toward the end of March. Or maybe, if you're thinking about buying the stock today, right? Notice that, hang on. Notice that you see these periods of growth taking place when they're kind of oversold here, right? You go from overbought to oversold. Here it is overbought again. and it starts growing when it's oversold, right? So you see those moves. The important thing is that when you are looking at oversold positions, what you want to look for and ensure is that the stock has recently transitioned with money flow, right? You go from, let me go and clean up here. You go from negative money flow to positive, right? You go from negative up to positive with relative strength here, right? So you're seeing it's outperforming the overall market. The key thing is trying to line up these oversold positions here for a clear-cut opportunity. Now, certainly there's been a bit of a sell-off in the stock. You see a little bit of drop-off. I think the stock reported earnings within the past couple of days. So it makes sense for people to be profit-taking here. But overall, I'm not too concerned about this drop-off because the overall stock is still in very bullish position. You can see its power gauge rating at the top, and it's still outperforming the overall market. So now, again, what I was looking for when I screened for a stock, the important thing is knowing when to use the screener, right? Remember that we started by analyzing the overall market, right? So if the overall market was in an oversold position right now, I'd be showing you a screen that I ran from this morning. Because if the market is so strong with its power gauge rating, with the overall trend of money flow, and if you see that it's oversold, not only does it tell you the market's in strong shape, but also that it's in an oversold position, right? So it's good timing. Today, obviously, we saw that the market itself is still dealing with hesitation for earnings, as well as for being in an overbought position. So the important thing to note here is that you don't really want to look for oversold positions when the market itself is not oversold, right? So that's just proper diligence for timing, right? So I want to make sure that we note for today where we stand. Today's what, the 26th. It's important to note that even though we ideally want to look for this type of setup in stocks, it's important to keep in mind what the condition of the overall market allows for. Now, what we can learn from, though, is looking for bullish power gauge ratings. Definitely helps to look for stocks with strong relative strength. There's a few other factors we can add in here. Again, if the overall market itself was in good shape right now, I would definitely be throwing in oversold. And then from that point, going through my full diligence. I prefer to look for money flow on my own when I'm looking at it on this chart, because there will be plenty of examples where money flow isn't significantly positive, right? But that's okay. You don't need to have everything in its own position. So, all right, let's go into my bearish example here. So I'm going to show you a stock in a few seconds that isn't what I would say classically bearish, right? It's not too significantly bearish, but I want to at least give you an idea for what can eventually develop in a stock. So the important thing is when you are looking for a classically bearish one is the fact that you're pretty much just flipping the same material over into a bearish criteria, right? We don't want you to expect a smooth bell-shaped curve here, but instead just picture a downward facing Wyckoff pattern. And the stock I wanted to show you here is Apple, right? Apple reports earnings after the close today. And you'll see that it was bearish for a little bit back in the middle of March. And in fact, it turned bearish again just this week, right? Now, it's worth noting here, this is a pretty uncommon scenario that I hope you deal with, right? So I don't want you to think this is going to be the normal, this is going to be standard, but I figured since everybody always has something to say about Apple and the fact that it reports for earnings today, I thought I might as well go ahead and throw out an example here. So take note of a few things here. This is just some observations I've made. The last time that Apple was bullish was all the way back here in August. Now, this is a great example for what I said earlier, where you don't really want to look for, a stock to buy if it's been bullish for less than about 2 or 3 weeks, and it's below its long-term trend, right? You can see it was below its long-term, and it was bullish for a very short period of time, right? So if you're using Chaikin analytics, you're avoiding this downward movement in Apple because you don't want to be here for it, right? So instead, what I want you to focus on is just, I think it's worth paying attention to the fact that you're starting to see a little bit more bearish momentum here with the power gauge rating, right? You can see how Apple's going through a bit of a sell-off here. You can see how it really hasn't been outperforming the market since barely since September, but not significantly since about around the summer, right around that August timeframe. So overall for the stock, this is definitely not what I would say is a classic bear. I think you're starting to see some initial signs of some bearish momentum here. Um, Again, I think it's pretty helpful just to look at a stock since it does report today. But if you were to see it pick up its bearish momentum, bearish for about 3 to 4 weeks or so, and below its long-term trend, consider something like Amazon. Let me go and switch over. Bear with me for a second. I want to pull up my Chaikin Analytics account. And when I'm looking at Amazon, you can see how Amazon took a turn, right as it New Year started, totally dropped off. It's rallied a bit, but overall here it is again down about 1.5%. Reports in 2 days. This is one of those stocks where you really don't too feel comfortable with its growth potential here. So, and you can kind of see how Apple's starting to kind of take on a little bit of that trend. Poor money flow, drop off of relative strength. Again, it's more of a better example of like a wait and see. Instead, for a classically bearish example, consider something here like Kinder Morgan. Kinder Morgan has been a great opportunity throughout pretty much since 2015, where you constantly see trends of overbought positions, bearish power gauge rating, poor money flow, poor relative strength. You can clearly see how there are opportunities just constantly happening here. Oh, sorry. 1 second, 1 second. All right, I think you can see my screen now. Sorry about that. Somebody said my Amazon chart wasn't showing. 1 second. Let's see. I have Amazon on my page right now. Let me know if you can see. Let me know if you can see that. Just type in the word yes if you can see my screen again. All right, cool. Thanks, Ralph. Amazon here again. You can see right as it was picking up the bearish momentum, really dropped off along with the rest of the market. But it is important to note, compare Amazon's performance versus the overall market. That's exactly what you get here with relative strength. You can see how it's doing worse. You had the sell-off of money flow. You have the power gauge rating bearish here. It's recovered along with the rest of the market. But what I would certainly watch for, what I would be mindful of, is really what is its actual growth potential here. If you still have a position in Amazon, part of the worrying thing is the fact that you've got to wonder, to a certain extent, like the overall market, what is the breakout potential here? So, Chris has a really good question here. I'll answer this before we go through the tour. What approach would you take on a bullish stock that is oversold while the market is overbought? That's a really good question here. Let me see if Chris, if you have an example of something you want me to look at, go ahead and chat in the ticker symbol. If not, I'll find an example here. In fact, yeah, let me go ahead and screen for one. AT&T. I was actually just thinking that. So Chris's question here is, what do I do with AT&T since it's in good shape? Money flows, the power gauge rating is very bullish. It's been above its long-term trend for a while. Money flow is still good, a little bit of a tail off, but overall it's still okay. Relative strength is still positive, but tailing off. Now, but you're oversold here. So what do I do with this? By the way, it reports earnings after the close today as well. Another person not showing. That's really weird. Sorry about that. I don't know why it's not showing. Let me know if you can see it now. All right, sorry about that. Let me do this. 1 moment. Let's see. Usually, I see somebody saying kind of slow down the screen movement, but usually that doesn't cause much of a problem. 1 moment. I'm just going to show you my full screen, so that doesn't change at all. Anyway, all right, so AT&T here. I think the big thing is if anybody's considering a position in AT&T, I think the important thing is to perhaps wait for it to report earnings. You can see how it does have a very strong rating for earnings, but you have had a pretty significant tail off here. AT&T is known for its 5% dividend, which is pretty good. But overall, it's been, I mean, what's the only thing better than 5% dividend is actual growth here. You've gone up almost 25% since the start of the year. But anyway, along those lines here, I think the important thing is, depending on how much of a risk you want to take, you could get in before it reports, or with the overall market, though. My mentality is more of a disciplined approach. What's better than going into a bullish stock that's oversold when the market's overbought? The only thing better than that is going to a bullish stock that's oversold when the market is oversold. So I think as long as you recognize that you're going against the market, there is a reduced likelihood of the stock doing well. It could do really well. I mean, after all, AT&T did really well in January compared to the overall market. It really thrived. But what I try to get away from, what I help try to get people away from thinking is, well, X, Y, or Z stock is different. It's different from the market. Not everything goes with the market. And that's certainly true, but there are a handful that behave differently. But I think instead, what's a little bit more important is that you have a routine and methodology that you can repeat on a constant basis. And so I would tell you, from a general point of view, stick with looking for buying opportunities when the overall market itself allows for buying opportunities, which for short-term purposes isn't necessarily today. All right. With that said, I'm going to go ahead and do a little bit of an off-the-cuff tour of the program. So what I would recommend if you're new to Chaikin Analytics, maybe if you just joined us from the webinar last night, certainly want to welcome you. I'm glad you attended these sessions early on. There's a lot. I think I've shown you a good handful of content here already, and it might be a little overwhelming. So if you are brand new to the program, I would recommend just to take some time searching for stocks using our screener here. Pardon me, not our screener. Our search bar. So whether it is a stock like Apple, right? Maybe it's Tesla. Maybe these are some of your favorite stocks to look at. We would recommend just pull them up, and if you're already familiar with the price movement here, that's great. But use this to get a sense for how we've been rating the stock recently, right? Look at the trend of money flow. Look at our power gauge rating. I would tell you that's the first thing to look at. If you think about a big name stock like Tesla here, we're really bearish on it. Speaking of which, if you're interested in how to access this content, see this white triangle in the upper right-hand corner. This will actually allow you to see the criteria we use that rolls up into our power gauge rating. Remember, we have 20 factors that we're measuring. They're updated on a daily basis. And ultimately, you can see for something like earnings here, how you can get a sense for how the stock is likely to perform. Tesla is one of those story stocks, one of those, I guess I could refer to it as almost like an exception stock, so to speak. If you look at it objectively, it's in awful condition. Right? Financials are just a complete mess. Earnings are a mess. Experts' opinions are a complete mess. Technicals, you have really strong performance versus the overall market. Got plenty of volume, but overall, we're still very skeptical about it. Don't ever. If you ever hear Mark talk about Tesla, specifically their CEO Elon Musk, he's pretty much saying that there's not a whole lot of weight behind the kind of gimmicks he pulls to pump up the value of the stock. But you can see how there are plenty of cases where here's a case where it misses earnings by almost $1 per share, but then since that time it's just kind of skyrocketed, right? I think this is one of the perils of trading on earnings, but at the same time it's also one of those things where it doesn't really make sense for a stock in such poor shape for its price to do well. Although I'll certainly recognize we're here not really to judge a stock but rather profit from it. So but this is just one of those things that you can look through. Again, I know Tesla just happens to be one of those big names out there. I pulled up, without mentioning it, the earnings per share information. So we do have EPS information. We just added this a little bit more than a month ago, and it's been a wonderful help. If you're interested in trading earnings or just being aware of earnings season as a whole, I have to say that probably the best upgrade we've made is to allow the capability to actually show when a stock reported earnings on its chart. You can do this just by, again, clicking on the EPS icon and just checking off this box here, and you'll see each of them in the moments. You can hover over it, see what the details were, how it reported, and you'll get a better sense. if you do not see this earnings information here, odds are your screen is probably stretched in too thin. See how I just did that? Or let's see, after expanding your screen, you'll be able to see it. Another problem may be is that if you zoom in too far, if you just zoom in, see how it disappears. Whereas if I zoom out, I can see the earnings information here. So that's probably, if you're not seeing this on your screen right now, it's probably because you're zoomed in or it's a little too stretched. Signal information. So if you want to see a pair of buy or sell signals, signals are for the most part very helpful. We say that they work probably about 70% of the time. The two that we use most often are overbought, oversold, and relative strength. But the important thing to keep in mind, I want to bring your attention to this signal here that clearly did not do what was expected. And I think this is a really good example for why you don't want to immediately follow buy and sell signals, right? They're really meant to bring your attention to one of the indications on our page. So I pulled up our oversold buy, overbought sell signals, and when used appropriately, these can be really reliable. Now, the thing we want you to think about is the signal here was making you aware that Tesla at the time was overbought. Notice how the green line started just crossing up above the 70 marker. Well, if you're looking at just that signal, then you're ignoring the fact that the market here was coming through an oversold position and rallying very sharply. Long story short, Mark Chaikin had been telling us in Market Insights, look for a W-shaped bottom in the market to make a rally. It's exactly what happened back here in August and September. It's exactly what was starting back here in February. So at the very least, we are being cautiously optimistic about the market's growth potential. And certainly, unless you're in a position where you want to take some wild risks, you could be shorting against it, betting against the market here. But with such strong money flow, and at the time improved power gauge ratings, you're not really thinking about selling. You're not thinking about shorting, at least not from an advantageous point of view. So when we look at a stock like Tesla, you consider that sell signal comes into play, it's important to keep in mind that there are ideal times to utilize these. And clearly, I think if you're looking at the market, then while the stock itself was becoming overbought, you're better off looking for buying opportunities with stronger rated stocks. So signals, again, if used properly, can be very helpful. But the reason why I typically do not incorporate them into my presentation is just because the methodology that you can utilize is much more efficient. Few other things, some other things I usually bring up in our presentation. Obviously, really the most important thing I have to say is just knowing where support is. Top of the page, there's a stack of books here, and you can go through all the details here. Our resource center is where you'll find all the information about our webinars. Our user guide has a lot of very helpful content to read through. And then, of course, if you ever want to get in touch with us via phone call, email, or scheduling a session with us, you can do all of that here. So let's see, I'm going to look at the questions here. We'll go through anything that's come through. If you do have any questions, now's a great time to ask them. And let me go ahead and get started here. So, can you review the long short signals? Yeah, okay, pretty much covered that. Yeah, buy and sell signals. Think of them more as bullish or bearish indications. Again, I think the more important thing is to focus on the overall market. Let me go ahead and just fix this over here. So yeah, I think if you keep your attention on the overall market and use the screener appropriately, you'll be in good shape. Let's see. Thanks for the explanation, Rhonda. You're welcome, Kat. Can you review the hot list? Yeah, hot lists are really fun. So there was a point when we didn't have our screener here. The screener is it has to be. It's just the best addition we've made to our program. The whole process, the time and effort that goes into actually finding an appropriate stock is completely eliminated if you can efficiently use the screener. But there was a time where we didn't have this here. So what we did, instead of having people kind of dig through sectors and look for individual stocks, before, when I initially joined the company, you would actually have to look at the top sector and look at these bullish or very bullish stocks and go one by one, right? Well, what we did to kind of help supplement that process is that we created these Chaikin hot lists. These are pre-screened lists, so to speak, right? I think you'll get a good idea for what's here if you consider our featured bulls and bears list. These are stocks. You have two different categories, really. You have bullish and bearish versions of really, really strong or really, really weak stocks. And we have groups that are showing you stocks that are becoming classic bulls or becoming classic bears. Now, they're very, I guess you could say, the bullish turnarounds one, where you're looking for stocks that are starting to kind of make a move, they're very early on in their development, right? So I really have, I can honestly say I've never found a stock in this list that was significantly ready for a move. I think usually a lot of these kind of need a little extra time. Looking at Skechers here, for example, you can see the stock's just starting to kind of peak above its long term. It's been bullish for about a week, right? These are all good signs, right? It's good to be aware of this ahead of time, but it's also important to note that it's a little early here as well. You can see it's overbought as well. So it's one of those things where if you're going to immediately go in on a stock like this, then obviously there's a good amount of risk associated with it, and we want you to know that. However, this is definitely, this is definitely a pretty helpful short list of stocks for opportunities to look for. Same applies here for the rest of these bullish turnarounds, and then of course for bearish ones, if you're looking for classic bears, you know. Not too surprised to see that there aren't a ton. Let's take a look at. There's only one listed here, MGEE, utility stock. Hint, hint. I think we were looking at that as one of the sectors that is starting to kind of tail off a little bit. So you can see it's below its long term. Money flow is turned. Power gauge ratings bearish. Relative strength is dropping off. So you're certainly not thinking about this as a buying opportunity, right? Imagine before you had Chaikin Analytics, where you couldn't really, you didn't have any kind of indication for the power gauge rating. Imagine even if you're just looking at the chart here. If you look at the price chart, I'm thinking you can only see the price chart right now. This is a relatively good sign, right? You can see it's done really well, and it's pulled back a little bit. That's fine. But overall, with the power gauge rating, this allows you to see a forecast. It's almost like, in a lot of ways, it's kind of like checking the weather. But with that said, having the power gauge rating here really kind of makes you aware of when danger is ahead. So. Then the remainder of these groups here, of course, we have similar types of categories for signals. We just kind of file these away for you. You have different indicators like really strong money flow or really weak money flow, as well as relative strength, strong and weak. Plenty of other details here as well if you want to dig through those. They're all kind of just added material. It's all really idea generation. It's supplemental. It's extra. I would greatly recommend that you spend more time just kind of, if you haven't already, if you're in this position, I would recommend that you make sure you get comfortable analyzing the condition of the market before you start kind of digging through for like the next gold mine, so to speak. Any other questions? Anything else before we wrap up? All right, guys. Well, thank you all very much for coming out. Have a great afternoon. Remember, the session's recorded, so you can check it out on the resources page. Have a great afternoon, and we'll see you next time.